Hi there, James Preston with you on Kalkine TV, and you're watching the Market Movers. And there is plenty of movement in the Australian share market, which has been seesawing as a result of the cooling of US markets overnight. There is also a tug-of-war between IT, telecommunications and utilities pulling the ASX 200 cords, while energy, mining and healthcare sectors are all trading in red territory. On that note, let us zoom our lens on the market performance today and the drivers under the spotlight. The Australian share market continues to reflect curving trends today, led by gains in IT stocks amid softening yields and inflation anxiety, while miners and energy players are also capping the gains. IT has been hogging the headlines of late, and it's not hard to see why, with technology shares seemingly rejoicing due to a fresh insistence from Fed officials, encouraging investors' rotation from cyclical stocks to their growth counterparts. The investors are regaining risk appetite, keeping inflation worries on the sidelines for the time being. The stock of the global provider of cloud-based software solutions, Wisetech Global combined, climbed up the ASX 200 board. The rate-sensitive stock may have gained after the US Federal Reserve reiterated that the latest rise in inflation would be transitory. Adding to the tech sector buoyancy, the shares of the data center operator Next-D.C rose just over 5%. The rate-sensitive tech stock has been rated as buys by multiple brokers, which may indicate a possible opportunity for investors. After scaring off investors for the last few months, inflation fears seem to be subsiding. Concerns about high inflation potentially resulting in the US Fed to opt for an interest rate hike eased lately after a chorus of Fed officials reiterated that the recent upsurge in inflation would again be transitory. The Fed's soothing words put investors tapering worries to rest for the time being, but that didn't stop the US dollar from hovering around a 4-month low on Tuesday. Meanwhile, we can still see some reflection of inflationary concerns in the recently released US consumer confidence figures, which demonstrated a fall for the first time this year in May. The consumer confidence tickled down as Americans were less optimistic about the labour market and income prospects over the next 6 months, possibly due to higher inflation and waning fiscal support. While consumers' outlook retreated in the recent report, the confidence still hovered near COVID-19 pandemic-era highs. All eyes are now glued to revised first quarter GDP growth numbers to be unveiled by the Bureau of Economic Analysis later this week, which may define the Fed's attitude over inflation that has been shaking markets this year. The oil price charter is capping ASX gains today, so let's take a look at exactly how that breaks down. Australian energy companies such as Oil Search, Beach Energy and Santos are trading in the red territory. This is despite crude oil prices having inched higher on Tuesday on the back of increased demand from the Northern Hemisphere driving season and also the easing of global COVID-19 lockdowns, which in turn offset concerns of excessive supply if Iran were to return to the market. From one subsurface moneymaker to another, let's take a look at Australia's metals and mining index that fell to be the top drag on the benchmark. Iron ore prices have been under pressure lately as top metals consumer China vowed to strengthen price controls of key materials over the next 5 years. That includes iron ore. Spot iron ore prices in China hit a record high of $233 per tonne last week, but have pared gains to trade around Australian $193 a tonne. Mining titan BHP Group tumbled to hit a 5-week low, while rival Rio Tinto also eased on the board. Then the world's 4th biggest iron ore miner, Fortescue Metals Group, also shed gains on the benchmark. And taking a look at our major gold players, they've charged up the ASX today. Gold stocks such as Westgold Resources, Northern Star, Regis Resources and Silver Lake are leading percentage gainers, soaring high amid gold price intake on the back of a dip in US consumer confidence. And now, before I share today's ASX top gainers, it's time to take a short break here on Kalkine TV.
At Kalkine TV, we'll take you to the heart of the Australian equity market. We'll bring you breakthrough stories that highlight volatility, as well as tailwinds building across the length and breadth of markets. Whether space travel will gain momentum, while economies may gradually open amid vaccine rollouts, our experts will share their timely inputs. So join us on this exciting journey of live streaming, financial and stock market news. Kalkine TV.
Welcome back to Kalkine TV. I'm James Preston. It's great to have your company on Market Movers, live from Sydney. Let's now take a look at some other stock gainers on the board that are maintaining the ASX 200 momentum. Well, there is plenty happening around our stock exchange, particularly in the form of the Commonwealth Bank of Australia. Australia's biggest bank and lender rose as it crossed Australian $100 in value for the first time in history. Truly a record-breaking day. Shares have been gathering momentum since the first week of May, when Australian banks began reporting half-yearly earnings that pointed to a strong financial recovery in the country. CBA's Q3 results on the 12th of May continued the trend and signalled credit quality across its lending portfolios was quite sound. Meanwhile, the testing services provider, ALS, is edging up after reporting a 35% increase in profit. The company stated that financial year net attributable profit surged as losses from impairment were offset by proceeds from China's asset sales. Notably, the company has declared a final dividend of 14.6 cents per share, more than double from a year earlier. Then Fletcher Building is also charged up on the ASX 200 board post-guidance upgrade. Fletcher Building said that it has upgraded its guidance and will undertake a capital return to shareholders of up to 300 million New Zealand dollars. Notably, Fletcher Building is one of the largest listed companies in New Zealand. The company is involved in the manufacturing and distribution of building materials, as well as residential and commercial construction. Shares of software company DUG Technology is advancing an upbeat outlook. The company shared it expects high tender activity resulting from recovering market conditions to contribute positively to revenue growth in the 2022 financial year. DUG stated elevated levels of activity has led to increasing project awards. However, in January through to April, DUG Technology revenue dropped to Australian 11.8 million, down from 13.8 million in the one-year period dating back to 2020. Moving on, the shares of Clearview Technologies are gaining on tie-up with Dutch firm. The company stated it signed a term sheet with Dutch glazing tech maker E. Lestar Dynamics Holdings BV to form a joint venture. The joint venture is to develop a product suite that combines the technologies of both companies. Well, that's it for me. Hope you enjoyed the Market Movers program. Don't go too far though. Kalkine's Penny Picks program isn't too far away, and make sure to keep it tuned here to Kalkine TV for the latest across the economy, markets and sectors.